Hi there, Mr. Holcomb here with another episode of The Math Behind the Modules. Okay, Chapter 5.4, Employee Benefits. So you get a job, you're now an employee, an employer hired you. Over here off to the side is all the benefits you could receive as an employee. Insurance, that could be life insurance, health insurance, disability insurance. You get hurt, you're insured. You get sick, you go to the doctor, they pay for your health care. You die, your family gets some sort of financial reimbursement. That is insurance. Paid vacation time. A lot of companies will give you a week when you begin, and then the longer you work for them, that increases. So paid vacation time, you take a week off, you still get a paycheck. Paid time off is like a sick day or other day other than a vacation. You may get paid time off. So like, for example, some teachers get 10 paid time off days a year. You use them or lose them, or they transfer over into a retirement plan of some sort. Many different possible outcomes from that. A retirement plan could be just that. It could be stock ownership. It could be something IRA. Teachers get what are called 403Bs, and that's just a type of plan where you can put your money and have something when you retire. Stock ownership plans, basically the same thing. What that means in a company, if you work for a company, like my nephew just got a job at Amazon, if they had a stock ownership plan, he may be eligible for getting stocks in Amazon. So it's stock ownership just means that you're going to get a portion of the company. You would be actually considered, when you own a stock to a company, you are considered a partial owner. Okay, and then child care leave, that's just that. If your child is sick or for any other reason cannot be in school, or the parent needs to be home to take care of them, there are a certain number of days some companies will give, and they will have days off for child care leave. Family health care, same thing, just different family members. Individual health care, pension, unemployment insurance, that is if you are no longer able to work at your job and it is beyond your control, you may benefit from unemployment insurance, and that gets taken out of your paycheck every week. And then if you become unemployed, you can draw back off of that and have a portion of what you earned when you are working if you are unemployed for a period of time. Okay, and then base period. That's just a starting period. What did they say in here for base period? That one's hard to explain, so let me just read it. The actual formula used to compute the weekly compensation varies from state to state. Most states make the determination on salaries that the employee earned during a fixed period of time known as the base period. Okay, so that's basically talking about unemployment insurance, and there's a base period. Okay, and then there's what's called workers' compensation. And what that is a benefit by the government that the extent of the compensation from the program is governed by state laws, but the purpose of the program is to offer assistance to employees who are injured while working at their job. That's workers' comp. Okay, so let's move on to example 1. It says, Alan works for a printing company. It has been a little over 4 years since he was hired. He now makes $54,080 per year after 4 years. When he was hired, he was told that he had 5 days of paid vacation time. For each year that he works at the company, he would gain another 2 days of paid vacation time to a maximum of 20. Okay, they usually will max out because eventually you would be off all year and just get paid. That's called retirement, by the way. So how many paid vacation days does he now get at the end of 4 years of employment, and how much money will he earn while he is on vacation? So here is a table to explain that. So number of years worked, 0. Okay, right from the start, he got 5 days when he was hired, 5 days paid vacation time. After working a year, he got 2 more days. That adds up to 7. Year 2, he got 2 more days. Now we're up to 9. Year 3, he got 2 more days. Now we're up to 11. And finally, year 4, he is up to 13 days of paid vacation. Okay, so this is an arithmetic sequence where a sub 1 is 5 and the common difference is 2. And that way we could calculate it more quickly. Okay, so at the end of 4 years, it now says how many paid vacation days does he now get at the end of 4 years? How much money will he earn while he is on vacation? So his salary is $54,080. Okay, so let me switch back to my pen. Here is his salary, and he makes $54,080 a year. Okay, so if I divide that by 52, that will determine what he makes in a week. So let me get my calculator and put 54,080 divided by 52. And that is $1,040 a week. Okay. So that's $1,040 a week. Alan's typical work week consists of 5 business days. So he has 2 work weeks plus 3 days. All right. So 13 is 5 plus 5 plus 3. 5 days is a week, 5 days is a week, 3 days is 3/5 of a week, if you will, which is equivalent to 60% or 0.6. So I would take $1,040 and multiply it by 2.6. That's number of weeks. And when I do that, times 2.6 is $2,704. Pretty decent benefit. 2.6 weeks off. In that period of time, he will have made $2,704 and not have to go to work. Okay, so now it's your turn. Check your understanding. Pause the video, see if you can do this. Come back, see how you did. So now it says, let X represent the number of Alan's work years. Okay, X is the number of his working years. And at the company, Y represents his number of paid vacation days. Based on the table above, write an algebraic equation that models the relationship between these two variables. Okay, so if I go back up here, I'm going to have it starting out with 0 or 5 at 0. So it's going to be 5 plus, and then X is number of working years, and Y represents number of paid vacation days. So he gets 2 days per year. So that'd be 2 times Y years. So it is 5 plus 2Y. Or wait, hang on. No, it's not. X is the number of working years. Y is the number of paid vacation days. So I've got that wrong here. So we're trying to find Y. Y is the number of paid vacation days. It equals 5 for the first year plus 2 times X, where X is the number of working years. So 1 year you get 2 days, 2 years you get 2 days, 3 years, 3 days, 4 years, 4 days, and so on. So the equation is this, or we could put it in proper order, standard form, and that would be Y equals 2X plus 5. Okay, example 2. Frida's employer offers her family health care as an employee benefit. Okay, family health care. Frida must contribute 12% to the cost of her, and her employer will cover the rest. Okay, so the employer is covering the other 88%. Frida gets paid on a bi-weekly basis, and she notices that $88.50 is taken out of each paycheck for her portion of the contribution. How much does Frida's employer contribute for her coverage? Okay, so what we need to do first is we need to find out how much they're taking out in a year. So the first thing I'm going to do is take $88.50 and multiply that by the biweekly basis. Well, biweekly means every other week, and that would divide 52 weeks in a year by 2 would be 26. So if I take $88.50 divided by 26, or times 26, not divided by, times 26. They take $88.50 every 2 weeks out of her. That is $2,301. Okay. All right. So Frida contributes 12% of the total amount. Okay. So this is her contribution, and that is 12% of some total. So I would say 0.12 times the total equals $2,301. Okay, so this is her 12% and X is the total. Then if we multiply both sides by 0.12, then we'll see how much that total will be. So if I take 2,301 and divide it by 0.12, I'm going to get $19,175. So 2,301 is 12% of $19,175. Okay. So Frida's family healthcare coverage costs $19,175. She contributes she contributes 2,301 to that total amount, and her employer pays the rest. So the question asked, how much does Frida's employer contribute? Well, this is the total cost, and she contributes $2,301. So the employer is left holding the bag on the rest. So 11 minus 3 is 8, 8 minus 2 is 6. And so therefore the employer had to pay $16,874. Okay. Now to check your understanding, pause the video, see if you can do this, come back, see how you did. Okay, let me get my highlighter here and mark this up. Marco's employer offers individual health care. Marco pays D dollars out of his bi-weekly paycheck for his share of the total. If Marco's contribution is a percentage of the total cost, where P represents that percentage, write an equivalent decimal representation, write an equivalent decimal, represent the total cost of Marco's coverage in terms of D and P. Okay, so doing these sometimes may be confusing to students. So what you should do is look at an example that didn't have all these variable thingies in there. All right, so what did we do over here? Well, we took the contribution from the employee and divided it by that percentage P. So the P is my denominator. So there's a starter. P represents the percentage, and we want it in terms of D and P. Well, what is D? Marco pays so many dollars. Well, this is this dollar amount, 2,300. And how did we get that? Well, we took that amount he paid, and it gets calculated from 26 paychecks. So it's D is the P is the percentage, and D is the dollars from his bi-weekly paycheck. So you take the total, 26 weeks times his pay gives us his annual pay, and then divide that by the percentage. So it's 26D divided by P. Okay, example 3, Marina is the director of the Washington Performing Arts Center. Her employer offers a pension. I sometimes wonder. Pension, there we go. Marina's employer uses a formula to calculate this pension. Marina is planning on, I keep messing up her name. Marina is planning on retiring at the end of this year after 25 years of employment. A retiring employee receives 1.5% of his or her average salary for the last 5 years of employment, multiplied by the number of years worked. Okay. Marina would receive this amount each year until her death. Her salaries for the last 5 years are these values. Calculate Marina's pension. Okay, so let's recap that. It's a pension. And she is going to, first we want to find the average of her last 5 years. So all that is $88,000 $900 plus $92,200 plus $96,000 plus $96,000 plus $98,000. And then finally, her last year of work, she made $102,000. Okay, and if we want the average of the last 5 years, well, average is just simply adding up those 5 things and dividing by how many there are. And let's do that. So let's see, 88900 plus 92200 plus 96000 plus 98,000 plus $102,000. Okay, and if I did that right, $477,000. 100, divide that by 5, and it's $95,420 average. And that sounds about right. 95,420. It's more than my lowest, it's less than my highest, so I'm assuming I did it correctly. Your average should be in between the high and the low. So now Marina's average salary for her last 5 years is $95,420. For each of the 25 years she worked at the center, she will receive 1.5% of that average. Okay, so remember that 1.5% right here as a decimal is 0.015. She'll make 1.5% of that $95,420. And so when I get the calculator out and multiply that amount by 0.015, 1.5%, she'll get $1,431.30. Was it 30? Yes. Okay, so she'll receive a pension. Oh, by the way, it is that amount times the number of years of service. So now then I multiply that by 25, and her pension is $35,782.50. Okay, not bad for not having to go to work anymore, but it's still 66,000 less than she was used to making. So it'd be quite the adjustment unless she has another retirement besides. What else do you get? Social Security, if that's still around when we're retiring. Okay, so compensating for that, you would have more than one income, hopefully. Okay, so now it's a check your understanding. Pause the video, see if you can do this, come back, see how you did. So it says the Brown Corporation offers employees a retirement plan based on the following formula. They will get 2% of the average of the final 3 years salary time times the number of years employed by the company. Suppose an employee's last 3 years of salaries are A, B, and C, and the employee last 3 years, A, B, and C, and the employee worked for Brown for D years. Write the algebraic expression that represents the employee's yearly pension. So if we think about what we just did, what did we do? We added up the last 5 years for Marina. And so in this company, it's the last 3, and the last 3 salaries are A plus B plus C divided by 3, and that's going to give us an average. And then you take that average, okay, and that's going to be times, let me just use a parenthesis, 0.022% of that average, okay. And it says, suppose an employee lasts 3 years of salary. What else? 3 times the number of years employed by the company. Finally, the 3-year salary times the number of years employed by the company, which would be D. So the answer should be A plus B plus C divided by 3 times 0.02 D. Okay, example 4 says, in Reese's state, the weekly unemployment compensation is 60%. of the 26-week average for the two highest salaried quarters. Okay, so a quarter is 3 consecutive months. There's 12 years in a month. 12 divided by 4 is 3. So a quarter is 3 consecutive months. January, February, March, April, May, June, July, August, September, October, November, December. So for July, August, and September, which is quarter 3, he earned a total of $9,024. In October, November, and December, the final quarter of the year, he earned a total of $98,000. Determine his unemployment compensation. Okay, so what we want to do here is we want to take that 9,024. So it's 9,024. And we're going to add it to our second quarter, or fourth quarter, I mean, which is 9,800. And that is going to equal $18,824. Okay. So then we take that and we divide that by the total earnings during these 26 months. So now I'm going to divide that by 26. So let me get my calculator. 18,824 divided by 26 is 724. Okay, so what did I do now? I took the third quarter plus the fourth quarter salary, added them up, divided by 26. That's how many weeks are in 2 quarters or a half a year. And that averaged out to be $724. So his 26-week average is $724 per week. And then it's going to be 60% of that average. So now we're going to take 0.60 or just 0.6 times 724. And that's what the question was asking for. So now I just multiply this by 0.6 and I get $434.40. Okay, so his unemployment compensation is $434.40. Okay, he will receive that amount until his 26-week benefit period is over, or he finds another job, whichever comes first. Okay, so it's good for 26 weeks. So now check your understanding, pause the video, see if you can solve this, come back, check, see how you did, and here we go. Wanda lives in the same state as Reese. Her weekly unemployment compensation is $360. Didn't I just choose this? Thank you. What were the total 26-week earnings for her highest 2 consecutive quarters of employment? So this one's backwards. This one is giving the total. Okay, so let's see, how are we going to do this? Okay, so I'm going to go back up and look at what I did here. And I'm going to call one quarter, the first quarter, A. She made A dollars in one quarter plus B dollars. Whoops, I wanted a lowercase b. I just went crazy with the beta. And B dollars, A plus B. And then we divided that by 26. And then we multiplied that by 0.6. 0 or just 0.6. And this came out to be $360. Okay, what were the total 26-week earnings for her highest 2 consecutive quarters of employment? Okay, so let me see if I got this right. She lives in the same state as Reese. This rule is going to apply. Add 2 quarters, divide by 26. So that's going to be the sum here. So I guess instead of just having A plus B, we can't find both of them. So let's just put a variable up here for A being A plus B, or our total income for 2 quarters divided by 26 times 60. So we want to solve for A here. Okay, so the first thing I would do is divide by 0.60. So I get A over 26 equals, and if I multiply both sides or divide both sides by 0.6, I get 360 divided by 0.6, and that will give me 600. Okay, and then to get rid of this 26, I obviously have to multiply both sides by 26. So when I do that, I get $15,600. Okay, so that's how much she made. All righty, so now and extend your understanding before we finish out this lesson. Now Lara lives in the same state as Reese still, she didn't move. And Lara made the same weekly salary for each of the 26 weeks of her 2 highest consecutive quarters, and she will receive a weekly unemployment compensation check of $570. What was her weekly salary when she worked for the company? So now if I go back to this formula we just calculated, okay, so in this case, it's the same. She made the same weekly salary for each of the 26 weeks. So if we went up here further to this one, these 2 values are the same, is all that's saying. So if I now just said 2 times that value, okay, one 13-week period or quarter, and another 13-week period or another quarter, which is 2 quarters, 2A, all right, divided by 26 times 0.60 equals, now this time it's $570. Okay, so this is more, so she will make more. So the first thing again is get that 2A over 26 by itself first by multiplying 570 or dividing 570 by 0.6. So 570 divided by 0.6 is $950. Okay, and then multiply both sides by 26. Okay, so times 26, and that's going to be $24,700. That's what she made in 2 quarters. Divide that by 2, and she made $12,350 per quarter. And what's it asking for? What's her weekly salary? Well, there's 13 weeks in a quarter. Divide by 13 and we're done. So I'm going to divide this by 26, it'd be the same. And it came out to be $950. What a coincidence. Okay. There you go, $950. That is the end of lesson 4, chapter 5-4.